Hello, people of YouTube. It is Sunday night at 7:46 p.m. 7:46 p.m. and for the first time, I decided to do what we typically do in the trading room, which is a weekly forecast. A weekly forecast is basically the time when we go through every single asset that is important to us, that is important to those members in the group. If you are a member and you have questions about any asset in particular that is important for you, Sunday nights is the time when we review those levels and study from the technical perspective potential directions for either swing trades, position trades, or investing to mid and long term. Due to the conditions that we have in the market now, we haven't been taking any mid or long-term positions. We have been exclusively focused on the trades that we take on NASDAQ, and some of our members have been taking some active positions on cryptocurrencies. And so throughout the week in the trading group, starting with Sunday nights, we have set this time to do reviews of those levels. Now, before I go forward with our weekly forecast, I want to talk to you very briefly about our last week recap. Last week was one of those weeks in which we or I didn't took many trades. I didn't trade on Wednesday. I trade just a few trades on Thursday, and then Friday or Thursday, one of those 2 days in the morning, one of my daughters had a car accident. It was a minor, it was really nothing, but nevertheless it took my mind off the markets, and thanks God nothing happened to her, to the other person, or not even to the car. It was more like a scratch than anything that a good buff can potentially, most likely, just fix it. But I wanted to go over the numbers from last week just to show you what I did. Just trade and just basically scalping. And as you can see there, I took a total of 21 trades, and 15 of those were positive. And just give me 1 minute. I need to see something. Let me get this out of here. Just a second. Alright, because I need to make it larger so I can see it on my screen. Okay, now I can see better. So 21 trades for the whole week. As you can see in the top of my report, it says from Sunday the 12th, that was last Sunday, all the way to Friday. Total trades, all trades were a number of 21, giving me a gross PNL for the week of 730, way below my target. Total profits of all my trades were 1,620. Losing, or remember, expenses to generate those trades were 890. As you can see, 21 of those trades, 15 of those were positive and 6 were expenses. My win ratio continues to be pretty much consistent. If you've been watching my channel and my videos, They range somewhere around 60 to 80% win ratio. Out of 21 trades, I had a 71 win ratio, giving me an average. You see, the largest winning trade was $550 with an average winning trade of 108. That is contrast by my expenses of my negative trades. My largest losing trade was 360. My average losing trade was 148. I think I may not publish that video, but I did discuss with my people in the trading group on Wednesday that I did not take a single trade. I mentioned that Wednesdays they tend to be kind of like not too good of a day, so I didn't took any trades. But throughout the week on Thursday, I was not really in the mood. My mind, my thoughts, I was just not in it. And so, as you can see, my average winning trade was only about $100 versus my average losing trade was 148. So that's why, as I was taking those trades, I was focused on keeping my account clean, but my performance was directly related to my state of mind, and I was not in the best last week with my conscious focus on the trade. So that's why I didn't took that many trades. Like I said, our philosophy is to keep the account green, and as you can see, I gave back a total of about $1,000. So I made $1,620, and my total PNL after commissions and losing trades was only 601. That is just about 2 trades days, not even, because 700 is my average for my goal of 2 trade days. It will be 350 per day, and so I was way below my target for last week. But I wanted to show you that this is how psychology plays a big role in our trades. And when you're not feeling it, when your mind is not there, when you're stressed out, when you're concerned, when you're worried, do not trade. I am much better coming into this week with 600 positive and not 600 negative or in the red. And so, yes, it should have been 1620 or 14 or 13, but it was not, and that is okay, because at the end of the week I managed to still be in the green. All right, so I just want to show you that, and you can see my histograms there where I have the PNL history without fees and with fees. For the most part, it was constantly in the green, and then I just took those few trades, and that large trade of 360. Those can be detrimental for your psychology, and so I end up not trading much. But winning trades 71%. If you manage to stay in those above 55 and 60% win ratio with larger winners than losers, you will be profitable, and you will be profitable at the end of the week, at the end of the month. So that was it for the recap from last week. Let me go ahead and take it really quick. For the next 10 minutes, I'm going to show you what we do when we are trying to look for potential levels for swing trades, if any, or potential areas of support and resistance. And so what you're looking at is NASDAQ right now on the screen, and that is for the weekly. The weekly, because we just finished 1 week and we're starting second week. And so it is our point of beginning. We want to see what the market did last week. so we can kind of get an idea where we are going with this week. And so for those of you who are new, these are candlesticks, and these candlesticks are showing you the price and the action that took place in the Nasdaq futures for the whole entire week. Each one of these represent a week. And this red one here, really small, let me stretch that thing so you can see it. This red is this week starting today. Remember, for Nasdaq futures, we start on Sunday nights at 6 p.m. Eastern time. Every Sunday, you can start taking trades. The markets begin to move. And it goes all the way until Friday. Okay, but we don't have to wait until tomorrow morning at 9:30. Market is already open for us as futures traders, and we can start taking trades now if the setup was there. Now, how do we do this analysis? Well, the first thing I see, and moving forward to this next week, I like to do is just highlight the levels of interest from last week and whatever I can see from previous week that will potentially act as support and resistance. And if you see this here on this last week candle, we can see that all of the effort from the buyers to push the price above the previous week high was completely rejected and brought back almost to where they opened. And that was open last week. So if we get my horizontal lines, I like to highlight last week low, and then I like to highlight last week high, and then I'm going to highlight last week close and last week open. All right, and let me stretch that to make sure I get the right levels. And as you can see, now that I made that stretch, I can see much better. I'm gonna lock that, and then right here I'm gonna lock that. So the same thing I'm gonna do with this low. That one, it looks right where I want it. Let me lock that, and then let's go all the way up here, and that also looks good, so let me lock that. Okay, and so now today, this is this week's candle, we can see that we pretty much opened today. Let's show you right here with this. So last week candle went up, came back, and this was the close, and then we opened with a gap down right here. That's for this week, and we only try to make it back to the open where it failed. And let me stretch that. You see, when you stretch it, you can see it much better. And that goes right there. Nope, a little bit lower. Yeah, just about it. So this week's candle opened right at 12,380. Right now we're at 12,353, and we broke the open from last week. We broke that, meaning, for those of you new, this opening of the previous week was the level of support for today, or this week, should I say. So we would have appreciated it if this candle today, as it's coming down, would have stopped right here, but it didn't. And so right now, as we speak, this is where we are at 12,353. And so far, we are actually coming back up from this low for this week, which comes to be very close to not last week's close, but the week prior, okay? Which will be Monday, the week of Monday the 6th, 2 weeks from now. That's where the price closed. We just hit that level and it was rejected. So the price came down all the way to that week low, which it was the close. And today price got to that area and then it bounced back up, and that's where we are now. So these are the areas that I am interested to see what happens in the lower time frame for my scalps, because I know when we take our scalps that these will be amazing areas for what you see right now, what just happened. If we go and knew that on the weekly, that 346.50 or 46.25, let's just say the 346 was the close of 2 weeks from now. Look where the price just got, 46.75, and then it bounced. And it bounced. Right now, we're almost at 10 handles or 10 points just from that bounce. And this just happens in the last few hours. Okay, remember the market just opened 2 hours ago. It is Sunday night, and if you were aware of this position, you could have taken a trade long and be in profit right now with about 10 points. And now we are about, look at this, it's 357, 346.50, from 346.50 to 356.75. That's 10 points and a quarter, and potentially heading back up if we manage to keep going above 57.50, which is the opening of last week. Now, all that to say, these are very interesting trades for scalping, which is our bread and butter. But if you are looking to position yourself for a swing trade, you have right now not much signals, because you are basically trading inside this giant weekly candle. Okay, now if we look, we came from this push down on a weekly, and buyers were found here pushing the price higher, and all of the sellers got pushed out or flushed out with all these candles. As they had their stop losses, they were forced to sell. And now the buyers, since January, we can say since the first week of January, buyers have been pushing the price higher. Now, in order for me to think that the price is reversing, which I don't think so, I will need to, number one, see this weekly candle close below this giant weekly bar open. And that would only tells me if we get to close somewhere around 12,150. Now we only made, we're still not in a full reversal or continuation to the downtrend, but we still need to close below that weekly low, which is 11,874. We're really far away from that. But knowing the markets, you can very easily get this week to that point. We can break all these down and come here. Now, because of all the intensity of buying, I only estimate that these red bars are nothing but these buyers taking profit. If you did a swing position trade and you bought this breakout of this high, and you've been in this trade for week, 1 week, 2 week, 3 week, 4 weeks, then this level right here of support, of resistance, I'm sorry, which is all this block. Let me make a small box for you guys to see what I'm talking about. All of this area is nothing really there but selling pressure. So if, put it right there, okay? So if you bought here, this is nothing but bears selling. They went up here, they sold, they broke, they came back, and then they've sold again, and that's what they're doing now. Now I will be interested to see if the strength they had here, they can show that again here. I will doubt that. Why? I draw this trend line, and trend lines I know could be very subjective because everybody will position them where it seems to be more logical to their perspective. Now, one of the rule of thumbs is a trend line should touch a minimum of 2 points, ideally 3 or more. So this was a very clear trend line. Look at it, starting from the top. Price came on a range for several weeks. 1, 2, 3, 4, 5. So a month and a half. This is back in December of 2021. Okay, not 22. And then we have this shooting bar right here, followed by an engulfing or a complete rejection of that level that brought the price back down week after week after week after week, and then we had a pullback. Now this one, if I can zoom this in really big, as you can see, it's not really touching it, but we don't want to get so precise in our subjectivity that we become close-minded to the area. So I like to see more an area where I see this touch right here, bar close below, rejected, bar close below. This one came almost to it and then closed below, rejected, came right to it, closed below, and then here we are again. It's just an area. Imagine this thick orange line to be thicker than this, and then you'll see how they do touch, okay? But you can see that it touched there, and then here it acted as kind of support. You see how it broke that trend line? And then when the price was coming back down, it was rejected by that trend line, giving that support. So for that reason, I am thinking that we do have more room to the upside than to the downside. And if we do break to the downside this week, our main level of decision making will be right here. I want to make this one red. Okay, and more than a level, it will be an area. And let me do this. Yeah, somewhere around there. I want to make it for the purpose of support. This, if the price comes down here this week and the week coming up next, all right, then this should be a very strong area of buying orders. Stand to the right. Okay. By the way, as I'm making all these levels and highlighting them, I am leaving them on my chart so they can serve me as guide for next week as I go and take my trades. Now I know these areas right here, as you find, lots of buy-in. But if the price managed to break and get back in underneath this trend line, then we start looking lower. All right, and now again, we're looking only on the weekly. So we do have some very big candles on weeklies. So if we measure the size of this candle, can we have another one like this coming down here? Well, absolutely, anything is possible. But as of now, those are the areas, okay, that I am interested to see on my scalping. Now, let me just show you very quickly. Look what is happening. Remember what I just told you. If you would have purchased here at 46, looks where you are right now. Right now you're at 66. That would have been 20 points. Or if you have one contract, that would have been a $400 profit. And it's only 8:11 p.m. on a Sunday. This is how powerful our analysis works to generate amazing profit. Okay, so now what are we going to be looking at? This candle to come here. Then if we manage to stay above 1390 and really then break the 12,400, then we know we should be looking at this level right over here as our next target for the week. Remember, if I go down in the time frames, there will be many stops. Okay, it's not a one shot. These are the levels for the whole entire week that are levels of interest. I want to highlight that, and I'm also going to highlight the close of that week for that giant candle. And then I'm gonna do this here, and then one more right here. I log that, and now I think I did it all. I do one more here. Okay, and then that. Okay, so now I know where I'm trading. These are my levels, and if you become a student of mine, we go in detail more about what those levels mean and how to trade those levels effectively, which these levels are probably one of the best levels there are for weekly trades or swing trades. If I break this level let's say we break the 14,400 tomorrow or Tuesday, and we continue to see on a daily basis a good sign of continuation to the upside, like you see here, the 400, it will be right here. Really, ideally, I would like to see actually above 481 to take a swing trade. But on a daily basis, all we just experienced today on Sunday is just a small 20 point scalp. That if we go down to a 5-minute, then this is what we got. By the way, if you are looking at these numbers, I recommend you, if you have TradingView, I'll recommend that you use this indicator, which is called volume delta. Okay, volume delta by Kiosef Trading. I use it not for my scalps, but I use it for my analysis of levels. And the reason we do that is for obvious reason. You can see this is actual volume per price highlighted on the actual candlesticks. So you can see the number of sellers at the end of this week was only 11 or minus, and this is the delta, okay, which is the variation from the bid and the ask. We go in details in the training how to interpret the delta, but for simple purpose, if you manage to have this indicator, it gives you an idea to quantify where the buying or selling pressure is. And it's a visual idea, so you're not just guessing, but it's visual. Going back to the daily, we'll see here. One thing I really like also, you see this orange delta value of 11.9750. That's the number of contracts traded at that level. And when it's highlighted in orange, it's really highlighting what is called the POC, or the point of control. So in that day, remember, this is the daily chart. In that day, this bar, the point of control was at 12,479. And so when that day, with the price action of that day was happening in real time, that's where the most volume took place for that day. And you can see the next level was 10,000, but then after that, nothing compares to this. So this is very valuable information. Okay, look at it. Look what happened. That was on Tuesday the 14th, 2023, then Wednesday, and then Thursday. The same level acted again as a POC. All right, and it has the most, the point of control for the Thursday. And the price was not able to close below that point of C. So I'm giving you guys a lot of clues for those of you who are a little more advanced. If you are not understanding, subscribe. I will be bringing a lot of valuable content as we keep growing up this channel. Another thing this indicator does for you, based on the volume traded per levels, it highlights the heat map on who's in control below those levels. So you can see there are hardly no bearish action right here. All these below numbers here are nothing but controlled by, for the most part, the bears or the sellers trying to break to the lower side. But if you can see, again, this is today. This is the first day of that week we already covered. And remember, we bounced here at 46. Look where we are at 71. So we are 72. We are 2 points from 30 points at $20 per point. Well, you do the math. That would have been a great trade. All right, so we are just doing levels for the week. I'm saving this so that way my levels are safe for this week. Let me turn off the volume delta indicator so we get clean charts again. And now, very quickly this time, I'm gonna go through the weekly for Apple. And the reason why we go through these stocks is simply because these are the heavier, they carry their heavier weight on the NASDAQ index. Okay, if you look on the heat map, this is the heat map for the NASDAQ. We basically focus on potential trades on those heavy hitters with the most weight on the index. And I'm not going to spend too much time speaking about level for these stocks other than where we are for the week and how can that potentially affect the index. And so starting with Let me put here the level, and then this right here is an important level too. We're gonna make this one green. If we break above that, we should have a nice run stopping somewhere around 64, and then it might go all the way to 76, and right now it's at 52. Now, as you can see, sellers came, lost control here with this hammer, and remember, this is a week or a weekly price action manifested on this candle that opened up with a very cleared reversal pattern after the hammer from the support. And so then after that we have 1, 2, 3, 4 weeks, and very similar to the index, we have this giant candle, and for the last 2 weeks we've been basically trading inside of it. Now for swing trade positions, we will not be taking any swing trades. At least, well, you could, if you're not that greedy and you want to do a really small swing trade, if the price managed to close on the daily somewhere around 148, and you may have a nice short that I will take notice what happened at 44. I mean 144, and then another stop will be 141. So that is if we decide to go down and test the low. If we decide to, which as you can see, they already tried the last week's high. And that's a good sign for continuation to the upside. And but from 52 to 57, I'm not sure there is enough meat for you to risk go that way. Maybe not, depends on your strategies. And but where it seems to be more interesting is breaking above the 50, let's just say 60 and up. You'll have some more time. Now moving on to Microsoft, we were not able to break the high from previous week or the week before. This is, by the way, the stocks are not moving today because they are not open. They open tomorrow at 9:30. So in difference to the candles, you were looking at a live candle for NASDAQ. You're not going to see a live candle for the stocks or the equities because they are not open. Futures is, equities are not. So we are going to be opening, let's say this is Microsoft. Okay, Microsoft should be, I like this. Be interesting to see where will it open. Because if we open with a gap down below 254, then we may come down all the way to the 40s. But if we manage to stay really close there until we break 54, this looks like it's trying to go higher. Depends on where it's going to open. All right, but those are our levels for Microsoft. Quickly, Amazon, it is very interesting because it looks like it just wants to come down and at least make a double bottom somewhere around the 80s. And that is only because we do have a very strong, as you can see from market structure, we look at the different, let me highlight this, higher lows. That it's making consistently, and this could be another one, but it could come from 97 and then stop somewhere right there. This will be a very interesting day and see what happens. Right at 91. If you break 91, then the next stop will be 87. If you break 97, then we might be looking at the double bottom of 81. Not sure about that, but it does have a very nice formation to continue lower, creating another higher lows and lower lows. So Googled, I was sharing this with one of the students earlier. I did set up some, are some of the Fibonacci tools that we use in the class. I'm not using them here on this video for the sake of time, but since I already have this one up, I might as well just show you. Let me go back here and let me hide this. Let me hide this so you can see this first. So we went up, we tried to break the high and it was completely rejected, and then we took the low from the last week of January, and now we have this doji candle here from last week. Not much action on Google at the 94 level, but nevertheless it managed to close below the close of the previous week, and it managed to break the low of previous week. So what does that mean? Can we open, if we open with a gap down, can we come down here? We could. Now what we were talking about is that based on this, the point of control will be at 91. So this is the area where we could potentially have a reversal up, because all we have right now is a retracement from this run with a heavy influx of selling orders, which it is managing to keep the price below that 50% retracement out of this rally that last 1, 2, 3, 4, 5 weeks, and then for the last 2 weeks we've been pushing lower. Now what we were talking about is most likely we'll get to this point of control somewhere around 90, and then potentially buy around the 90 and then go back up. If you buy at 90 and price manage to stay above 90, 91, and then we move past 96, then you might be looking again somewhere in the future to 108 and potentially keep going up if it managed to go above that level. If it does manage to go above the level, assuming that we stay somewhere around this range and we break that level, you should potentially target somewhere around 113, 115, your secondary target. So your first target will be 107, which that's for swing trading. If you are scalping this thing on very small trades, then your first stop after you break the 95 will be 102, then 107, 113, 115, 120. Okay, and all the way to 129 or 130. This is a good spot to fade the move. But typically the way this thing goes down, then we go up somewhere around 113, 115, then we come back down to 107, and then we keep on going. That may take several weeks for that to happen. But the volume profile indicates some activity, but the bulls are really leading. Inside the value area, it is a little mixed, but the closer we get to the point of control, is slightly managed by the buyers. And the same thing, as we break above here, there is going to be more buyers than sellers in that area. If we go full into the daily and look at our let's see here, our levels inside the candles, as you can see, all the activity from sellers, look at this giant number of 352 was completely absorbed, and they try to push lower, which they did right around the area. They had a point of control of 63,000, but then they managed to push higher. And as you see here, most of these orders are mainly bullish. Okay, we have 200. Look how many we have: 352, 60, 258, 92. Those are the totals for the day. And last week on Friday it was 208. So unless something happens with the market, I think it will be safe to assume a potential clarity to the upside once we settle with this level. If it does break this 92, then I wouldn't be surprised if it cracks down all the way back to 83s, making a double bottom somewhere around here. And then what you'd have is a W pattern with this is the left part of the W, then this is the left part, and you form another V. So one V and the second V here, and then it goes up. So, but more or less that's what we got. All right. What time is it? It's 8:32. Really quick, Meta looks beautiful. It looks like we do. Wow, Meta was great. I hope some of you, oh wow, this was a beautiful reversal candle. Beautiful. This is textbook, and this is my first time in a while looking at this weekly for Meta, because last couple of meetings I haven't looked at Meta for whatever reason. And so on a weekly basis, very strong, very nice, beautiful. As long as we don't break 147 below, and even one between 47 and 38, we're still going up. Here we might have or form some sort of a cup and handle, you know, where price can come down all the way maybe to 159. We're at 152, 159, 160, and then form a cup and handle, and then continue up to the 237. That would be very interesting if that was to happen. A beautiful weekly for Meta. If you are long already from the bottom of 105, well, congratulations to you. You're banking. Nvidia, beautiful, and it looks like it's losing momentum. They did try to take the high, and by a penny. It was 30 and they got to 67, 75. They managed to break the previous week high right there from 24 to 47, just a quarter. But nevertheless, they did not visit the low, which is good news to continue to the upside. So even though this might look a little concerning as rejection, last week it was rejected from the 230s down to the 13s. The lowest was 209, but we did manage last week on Nvidia. Nvidia managed to stay above the close of the previous week, which it'd be interesting to see what's going to happen next. We can potentially stay in a range here, maybe come down, touch the open of the previous week, and perhaps push a little lower, and then goes back up we do have a beautiful end wave already completed too. So we have the leg number 1, and then we have leg number 2, and can we have leg number 3? Probably. So overall, everything looks, look at the Tesla looks beautiful as well. Very nice hammer, rejected from the 100. If you are long on Tesla, this looks beautiful. Now we're dealing with this resistance. Most likely, we either, if the buyers manage to keep control here, this is the area I will be interested to see a breakthrough all the way there. This whole area is really tricky. Really, really, really tricky. Yep, from there. So I will be interested to see what happens right around this area. Okay, because if we get, with all the nonsense that is happening in the world right now, this will pretty much serve as a very strong resisting area and push the price back down, freaking everybody out. Because what's gonna happen if they push this price down, they can start taking the stop losses of all the people going long, and then you have a double bottom right around 105. Very easily, very likely it could potentially happen. And if we go back to our theory of subjective trend lines and we try to touch them the most, that's what my subjectivity kind of gives me as an area, you know, for the trend line that it hasn't broken yet. I know that we're going to the moon once we break somewhere around this area. So far, this is still on a bearish side. Just basically coming back after freaking out everyone who was selling here, and you know, they were shorting. Now we're going back up, but potentially we can come back down. So this is a very interesting level. I wouldn't be buying now until I see a clear of all of these right now. Now Netflix looks beautiful. Not much to it, but Netflix is just strong. Netflix already went through capitulation on this area at the bottom of 160, and it lasted there between 160 to 200. Was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So what's that? 2.5 months, almost 3 months in capitulation, and then you have this move. Now we are dealing with this area of resistance. The question is, are we going to do accumulation there, or are we going to start distributing and then break this trend line back and then have another double bottom here? Chances are I'll be looking for price to come somewhere around this trend line, and this trend line again it's subjective, because you can also, but if you keep it in the area, I try to keep the idea that we are trading in an area. Okay, that helps you kind of have a better idea. So if this thing breaks here, then this whole gap in between these two trend lines should be an area of buying power or buying pressure. Okay, so somewhere around here. And then, but again, you gotta deal with this. You gotta deal with this. And so far, price did not broke this high. And remember, these are weekly. So this bar for last week was not able to break the previous week high, and previous week high was not able to break previous week high either, nor even as you can see, it opened below the close from the previous week, and then this one with the same thing. So if we break with a gap down around 345, we might come and visit 330s, 325, 320s. I mean, after such a nice 1, 2, 3, we can potentially have some range area around here if the market doesn't crash. Now, I just don't want to use that word crash loosely because it could mean so many things for so many people. But if the market doesn't take a sudden like this drop, you see this drop, that was in just 1 week. Can we have another one of these going all the way down? Absolutely. But if that doesn't happen and we manage to stay in a range, then that would be good news to continue to the upside, but not yet. So Netflix will be to watch. And lastly, the US dollar, we want to see what it's doing. And after such a nice rally that started all the way in January 2021, and it lasted 21 and all the way to 22, coming up on November 2022, we've been having a decline. But that decline at this point, it could be interpreted so many ways. Are we having here a head and shoulders? Maybe. Let's see. Somewhere there. You know, but these are the things that are kind of subjective. You know, very subjective. We don't miss. This is open. Something like that. Okay. That's only a maybe. We don't really trade those. I mean, I've been doing this for a while, and it only helps to kind of get an idea of what's going on. To me and to our team, what really matters is what happened with this weekly candle. Can you break the high? Can you break the low? Are you staying above the close? Are you staying below the close or the open? Those are the things that matter for us, because those head and shoulders, look at that. That was the shoulder, left shoulder was in May 2022. The head was in October 2022. And so the bottom right shoulder, January 2023. So we're talking about too much time in between for us to be concerned about that. You guys know our philosophy. We trade, we scalp, we swing trades, and that's it. We don't really focus on such a long trades for a year or so, but it helps us know. So as of now, we have an inside candle for the week. It looks like it's managing to stay above the close of previous week. Are we going to try to take this out and the high from previous week, which is 104? Maybe, maybe not. There will be a lot of selling all across between 104 and 105, that's for sure. So it's going to need a lot of push for the US dollar to strengthen itself and go past that level. But as of now, this is where we are with the US dollar. If you are in the trading group, please send me your questions on Telegram. If you're not in the trading group, go ahead and comment so we can talk about having and giving you access to the trading group as a trial, so you can see and participate in the conversations for the week. But I'm sorry. Having said that, 8:45 Eastern Time, Sunday, February 19, 2020. 125. Let's see where NASDAQ is. So we did all those levels. And look at that, where we are today. So with that being said, guys, thank you so much. It has been a pleasure. I wish you guys to have a great trading week. I'll see you tomorrow morning. We will be taking some trades and of NASDAQ as usual. But until then, be blessed and enjoy the beautiful life that God has given you. Until then, see ya, and thank you for your time.